Welcome. Trade recap. Today is Wednesday, September 10th. We had PPI this morning at 8:30. Let me show you the news. Today has been an interesting day in the market for sure. So, 8:30 and the producer price index. So, that was tomorrow, but today, producer price index. Now, the producer price index is anything that contributes to any domestic companies, and that's like companies within the border. So that's what was today. And then tomorrow is consumer price index. So the opposite side, consumer price index. Now, by consumer price index, this is like you, me, everybody else, individuals. But unemployment claims as well. So, with today being said, edged down 0.1% in August, which I looked this up and it's supposed to, um, it has a direct correlation with the Fed making a decision on cutting rates. And I guess by this 0.1%, it further, I guess it further pushes the Fed to cut rates this September, or not this September, but just sooner. So sooner than later. Anyways, how did that affect the market? So 8:30, huge bullish candle. Because like we said, this was further contributing to the idea of the Fed cutting rates, which has been real huge during this month of September because it's expected to happen this month in September, the first rate cut. And then by the rates getting cut, there will be more money in the market because there will be the ability to borrow money at a lower rate. So after that 8:30 news, we pushed all-time highs, and so we made all-time highs. And then right now, as you can see, so I started this live, but we're coming right out of orb, and we have 4 minutes until this candle closes, I think. Yeah, 4 minutes until the candle closes to see. But regularly, if I was trading, I would enter on a bullish candle closure outside of here because we broke structure to the upside outside of orb and then retraced back into orb, while we have had this morning during New York session an accumulation of bullish volume. So we've seen an increase in bullish volume versus bearish volume. But like I said earlier as well, with what's going on, we have news tomorrow. We had news earlier today, as well as the anticipation of rates being cut this September. And I mean, even I've seen on Twitter. So I've seen on Twitter or X, I've seen Trump's been pushing pressure as well to, he slams Powell after softer PPI data. Donald Trump attacked Fed Chair Jerome Powell on social media after August producers price index unexpectedly fell 0.1% versus a forecasted 0.3%. Just out, no inflation, too late, must lower the rate, big, right now. Powell is a total disaster, Trump wrote. So With this being said, um, with this being said, there's just a lot going on. And if you're not familiar, I'm not trading during the month of September. But I am showing up to every trade, every market open, and providing a trade recap as if I were to be placing a trade. Now, what's been going on? So aside from the S&P 500, Nvidia has been fucking pumping. So let's go on the 5 minute, y'all boys. So the other day we had information about how Broadcom become become the company to go to for a certain product that Nvidia used to provide. And after that information was released, price dropped. And I'm not entirely sure if that was the 28th. I'm not entirely sure if that was the reason for prior, but on Friday that was this drop. That was the news that was going on during that drop. And during that drop, I hopped in and I bought some shares. I think like 3 shares. And yesterday we weren't really doing much, as you can see here, but then today we opened higher, or price opened higher, and then um, Nvidia is part of the Magnificent Seven, with analysts predicting its cash flow and net cash may surpass 1 trillion by year end, boosting reserves to 500 billion by 2028. That's bullish. And I think what they mean by Magnificent Seven is like there's only 7 companies that, yeah, so Magnificent Seven stocks are a group of influential US technology companies known for their outsized market performance and dominance. Google, Amazon, Apple, Meta, Microsoft, Nvidia, Tesla. These would be great. I mean, these are great companies to invest in overall. Like, Microsoft provides very consistent returns, especially right now, how prices were in, like, Microsoft is in sort of um this decline, but this also means that, like, if anything, price is at a discount for where it's going to go overall, because there's so many things going on within Microsoft. Apple, another example of how there's so many expected changes, as well as Meta, Facebook, Instagram, and WhatsApp. Like, come on. Hmm. The Magnificent Seven, like, overall, to have those in your portfolio. Yo, if you invested in the Magnificent Seven a year ago, like in the past year, Google has provided a almost 60%. Let me see for Amazon. In the past year, Amazon has provided a 30, almost 32% increase. Past year, Meta provided a almost 50% increase. Let's see. Tesla, I know Tesla's gone crazy. Tesla past year, 60% increase. While in December, when you had all that Trump and Tesla stuff on social media, 100% increase in December. That is wild. So, during this time right now, my brain just lights up for possibilities of investing in the Magnificent Seven, or at least pieces of the Magnificent Seven during times of expansion for those industries. For example, Nvidia rates getting cut. Like I said, money is borrowed as at a lesser rate. There's more money in the market. If there's more money in the market, companies like Nvidia would be funded even further, and Tesla as well within these technology companies. These technology companies are like the, as far as what I know, in my experience and what I'm seeing, these are like the forefront companies, the companies that are like top of their line within their industry. And to invest in, say, Tesla as well as Nvidia right now, I feel like that would be a solid decision. And then Nvidia, Microsoft, what else? Tesla. I can see how somebody like what's his name? Something Petrulis. He's an investor, but I could see how he might make like fucking 5%, if he puts in like a million. What's 5% of a million? Um Fuck. Let me see. Yeah, that wasn't the right one. 5% of 1 million. 50K. So right off that, you'd make just 50K by investing well. Nvidia's at a discount. Down here was at a discount for because it's been pushing higher highs, higher lows. Um, this is crazy. Broadcom. Oh, this is when the tariff shit was going on. We are living in a time of making history. No bullshit. No, I likely would have entered on this. Bullish candle closure out. Putting my stop loss at equilibrium. Likely would have entered right here. Likely first take profit, second take profit would be probably 2R higher. But the fact that we have pushed all-time highs and knowing the information about the S&P 500 being more than half the time less than 1%, producing less than 1% more than half the time in September. XRP is also recovering. So I'd have likely been soon stopped out. That's if I even would have entered on it. No trade. $8.30 PPI. Large bullish candle. No trades. Price has just been consolidating. After that large bullish candle, SMT, a lower high on NASDAQ, higher low on S&P 500, and then a higher high made, a lower high made. Not optimal, honestly. So, or 5-minute retest. Now, if you don't know, the orb strategy is a mark out the 9:30 15-minute candle, the high and the low of that candle. And then what you are looking for after is for price to break structure, close above the orb high, in this case orb high, but it could be orb low, and then for price to come back, tap into orb high, tap into orb, and then we would like to see an exit of the candle following the trend. Basically, in an uptrend, we are looking for a bullish candle out, a green candle out, outside of orb, and then you would enter on that candle closure. For example, we broke structure to the upside. By breaking structure, I mean we closed above a recent high. This high right here. So we closed above a recent high, and then we came back into orb. Price fell back into the opening range, and then we saw a bullish candle close outside of orb. Now, yesterday was a better example of what this would look like. You have your orb marked out. Now, what I also failed to mention, or I did mention, but it's important that you don't take the first move out. So even if you see that price falls outside of orb, that's okay. Let's wait for price to go back into orb before considering of an entry, because you're looking for a retest for price to break structure. Because what are the trends that a stock price can follow, or an overall chart price can follow, is uptrend, downtrend, or consolidation. Now it can be a mixture of all, and now it can't be all of them at once, but it can be a mixture of, say, consolidation, downtrend. I like to throw in a volatile in that mix too to describe. Sometimes you might have a volatile downtrend. Sometimes you might consolidate and it might be volatile and a downtrend comes after it, which that is just horrible, because that's on a scale of most optimal to least optimal. That situation is least optimal regarding this strategy. But it's important to not take the first move out, wait for price to retrace back into orb, and then wait for price to fall back out in that direction. For example, price exited orb, retrace back in, exited orb. Now, since it was like a consolidation downtrend, and it just happened to be volatile as well, like we said, with news going on, that makes sense. We had expected volatility, but you see that we have this candle that looks like this, and it doesn't really give you much idea for direction, because we haven't been accumulating bearish. We've just been consolidating. There's no been not there's no been there was not a considerate amount of bearish volume accumulation, is what I'm trying to say. Basically, we've just been moving sideways. We haven't been moving up or down. So we see that price then falls, comes back up, falls. And as you see here, this was a breakout. This was the consolidation moving sideways before trend either goes higher or goes lower. And in this case, price went higher, did not close above that orb, and then price fell back down. And then you can see here that there has at this point been an accumulation of bearish order flow, bearish volume. So you would enter on this candle closure, likely being right here, targeting equilibrium. And when I back tested this trade, it was like 12 ticks. So we would literally have 12 ticks, 12 tick stop loss, and then a 12 tick take profit as a first take profit, because we place one take profit at 1 RR. And then we would target either 2 RR or wherever the recent low is, letting our profits run, which is essential in this strategy. And in this case, we would have taken profit right here on this line. Yesterday would have been a winner. Now today would have been a loser if I were to take in that trade. But we had news going on earlier, and as you can see here, it's just not much going on. There's a lot of anticipation. Even the perfect trader wouldn't have taken any trades. So I am. Closer than I was yesterday. What day was this? September 3rd. This was like September 4th. Where did these go? Get that shit out of here. Get that shit out of my face. Get that corn out of my face. Get that corn out of my face. Get that corn out of my face. I got a showing at 2. I got to pull up to the showing at 2 for this apartment. Now, whether I hope it's solid, and as my mom would say, knocks off all the things in my checklist. And a seamless transition is what I'm looking for. Now, the seamless part is up to me. It can be as seamless as I want it to be. It could be a complicated process, or it could be very simple. Hold on. Oh, yo, the dynamic wallpapers on Mac is just so. They're so fun to look at. It's just easing on the mind. You know, I've been thinking about something. I want to ask my grandpa what kind of returns has he seen in the market? Not even in competition wise, but to just know like, yo, when did he was he wise enough to hop in and not so much of an ignorant man to hop in the market and notice trends? Because the trend following part, I feel like anyone can do it regardless of what industry you're in. I think this is like the message that even Warren Buffett tries to push to people is like a consumer can be a great investor if they just follow their hobby. Because I feel like people in their own hobby, whether it's like yoga, people within yoga, if there's some new yoga profession or experience that comes out and it's dominating the yoga industry, yoga managers and people that own those yoga places, classroom managers, they have a sense for what's going on in the yoga industry and they know about that newfound um, activity that's making way around the yoga industry. So overall, I'm just curious, like, in my experience right now, price is pushing all-time highs. And that's really all that I've seen since, say, April is all-time highs. Now, he's been through years and years and years of the market. Dude's 80 years old. With that being said, I'm going to catch y'all boys later. Today, right now, I'm going to recap in my journal. I did not recap yesterday's trade, but I'm going to recap yesterday's trade. I'm going to recap today's trade. Like the trade recap part on my journal is not entirely associated with technicals or anything really about like the trade recap, the trade itself of me actually in the me observing the market, I guess. It's more my well-being and catching up with that and being trying to monitor my equilibrium. That's what I would say. So I might go after that if I have time. Walk to the beach? Or no, that shit. It's at 1. So I'd have to leave like right now. Low key, that's what I'm gonna do. I will journal when I get back from the apartment showing. And I have some schoolwork to do as well. Broadcom's pushing 10%. That's wild. And then, yeah. I'm going to catch y'all boys on the next one. I feel like each day, we are making a considerate amount of progress, but within today does not entirely feel like it. But in retrospect, the fact that I'm actually making executions, putting my money where my mouth is and making it happen. That's what I'm doing. And I understand. And what I've actually been thinking about is by making and taking risks that are higher, you will see a higher return. That's true. But you will also see bigger losses. But I'm not afraid of those bigger losses. Those bigger losses are expected. But all I have to do is continue playing within the game and staying in the game, getting market experience actually placing trades, experience investing for the long term. It's not even entirely for the long term. I'm expecting price to reach a certain point within a later date. But I'm not swing trading and I'm not entirely looking at it over a few years perspective. I'm thinking today within my current plan as far as what's going on with the Fed cutting rates. That's where my mind's at. And then I feel like by that time when rates are cut, there's going to be another collateral thing next. So that's where my mind's at. And by taking bigger calculated risks when this stuff is going on and putting my money where my mouth is, putting the money where my mouth is, and continuing to work on it, research, focus, hard work on myself, the money is a byproduct. The money is like the tool to play the game. It's like the controller to play the game. That's how I kind of see it. And by investing and doing these things, I feel like I have more of a before I was like on the outside of speculation, kind of like somebody outside of a stadium. That's how I see this. I was somebody outside of a stadium, and then I entered the stadium. I bought a ticket. For example, by now getting a job and having to by increasing my income, I now bought my ticket inside the building, and everyone's just trying to play the game, similar to like Spy Kids. Everyone's trying to play the game to get the objective, and the objective is to just what they say in 21 what 21 Savage said. Life life is about money and pussy, and you need to figure that out. Because once you figure that out, you'll be better off. So she said that shit. And if you really think about it, attention and intention, attention being what people are trying to get from others and what they are paying to others. Intention, what they're trying to do to get that attention from others. But also, I don't know. Um, like I said, like I have gotten my ticket inside of the game. And now by hopping in on these, getting experience, like I said, through market experience, investing, etc., I'm making my way slowly up the rank, but I'm trying to push out of this phase of friction at the start where you need a lot more friction force applied to just get the first step moving, and then you'll be able to apply, or then you will feel less friction force as time moves on and you keep working towards your goal. But I feel like right now, when you're trying to make it from nothing, there's just so much friction force and you just need to keep going. So that's where my head's at. I'm going to catch y'all boys later. That was a great recap. And I'm going to journal it later. Let's go. Wish me luck.